Let's bring in our next guest, former Fed Vice Chair Roger Ferguson, who served as president and CEO of TIAA. He's now a vice chairman of the Business Council and a CNBC contributor. Roger, thanks for joining us. Is your expectation for a recession gone up at all in the last couple of days from this, Roger, from stubbornly high inflation?
Well, Joe, you may recall that when all this started, I mentioned there was a risk of recession for just this reason, that the last little bit of getting inflation out of the way is going to be more complex than perhaps people had thought. The Fed may well have to hold rates higher, staying in restrictive territory the longer, and that by definition increases the risk of recession. So yes, my assessment is that the risk of recession has gone up moderately, not over 50%. So I wouldn't say it's the most likely outcome. But with every time we see a bad print, I don't know if there'll be more, that means the Fed has got to stay in tighter territory and therefore risking a recession.
Yeah, that you didn't like that number yesterday. I mean, that was, maybe it's a seasonal thing. Maybe, people raise prices at the beginning of the year, but there's just that was not a great number for someone like you who worries about the economy being stronger than we thought.
I think that's a fair statement. I know the analysis that says it might have been a blip. I hope that's the case. But, what we've seen is that, goods disinflation is certainly well advanced. Unfortunately, in the service sector, that's not the case. We see from yesterday that most of the surprise was in the service sector, even the service sector without housing, which is so-called the super core. So that does play into, a concern that inflation dynamics are not going to be as easy on the service side as they were on the goods side. And so the immaculate disinflation that we've had may not be the story going forward. I'm not yet saying, making that call definitively, but you're right. I look at that now less as a blip and more as a validation that the last bit of disinflation is going to be hard to come by.
Yeah, who knows? With the labor numbers, the unemployment, or the numbers that we've been getting on Friday were so out of against the conventional wisdom of where we were in the economy that, and then just historically, Roger, we're trying to normalize rates. We went up a lot and we went up fast. But on a historical basis, are we at would you call this a high level of interest rates?
Well, no, on a historical basis, this is not a high level of interest rates. Having said all of that, we have a couple of things working.
Right. If you go back far, like the early 20th century and stuff. But given what we saw from the 60s or 70s to the current period, I think of 6, 7, 8% is not crazy for the long rates.
Oh, I think that's absolutely correct. We've been through an unusual period of very, very low rates. We are now normalizing. The other issue that is certainly very uncertain is the so-called neutral rate. So the Fed thinks it's probably in restrictive territory, but there's a debate that says, the data thus far suggests maybe, it's not as restrictive as they think, which explains why it is that we're seeing surprises, positive surprises in the labor market, positive surprises in GDP growth. We like all of those things, obviously, but it may suggest to the Fed that it may have to stay higher than others have expected for a longer period. That's not the worst, if that's what it calls for, but it does increase that risk of recession that you and I were talking about.
All right, Roger. So I asked Steve, so you would be absolutely shocked if there was another rate hike in the next year? You would be shocked. Is that 0% chance, or it's not zero? It might be 1% chance?
Look, the chance of another rate hike is not zero. I would be very surprised. I think the more likely move is down, but later than the market had expected.
Okay.
Perhaps fewer cuts. That is now what I'm imagining as my baseline. But that does not exclude at all the possibility that the data will continue to be pretty hot and the Fed may feel obliged to do one more tightening. Seems unlikely, but I think you heard in the last press conference, Chair Powell musing on the possibility that, there might not be the kind of landing we hoped for. He put that as a risk out there, so it may well be in his mind as well to say, rate hike not definitively off the table, less likely, but not impossible.